Welcome to the Propertybuyer Podcast, where we explore the world of residential and commercial real estate to help you make better decisions about buying, selling, or investing in all types of property. Join me, Rich Harvey, CEO of propertybuyer.com.au and multi-award-winning buyer's advocate. Our podcast features expert interviews, market trends and insights, and practical tips for navigating the complex world of Australian real estate. Whether you're a home buyer, a seasoned property investor, commercial buyer, developer, or simply curious about the property market, our podcast is for you. Join us as we share our knowledge, strategies, and experience and help you achieve your property goals. Well, welcome to another edition of the Property Buyer Podcast. 2024 has been a year where we've heard the phrase cost of living pressures more than we've heard about infection rates during COVID. While households have been struggling to balance their own finances, the property market continues to perform at different speeds around the country. Some areas languishing or going backward a little, while others have had spectacular growth. But how will the various push and pull factors play out in 2025? Will there be another economic X factor hitting us from the blindside? And with a federal election due in May, how much will politics influence the housing market? And when will interest rates fall, and by how much? To make sense of the economic climate we're currently in and the housing market outlook, I'm really pleased to have Nerida Conisbee, Chief Economist at Ray White, to share her insights. Nerida recently authored an excellent report on the market outlook for 2025. Nerida, it's great to have you on the podcast today.
Great to be here. Thanks for having me.
Oh, it's a pleasure. Now, Nerida, I'm going to throw you in the deep end. We have a little tradition in the Property Buyer Podcast where we have a thought of the week, just to kind of get a little bit philosophical. And I've got a quote to give you, and it's from one of my favourite authors, Stephen Covey, who wrote that great book about 7 Habits. And his quote is, "I'm not a product of my circumstances. I'm a product of my decisions." What do you take from that?
I think I would take that it means you have control over where you're going, because if you are in control of your decisions, which you are, it can really change your direction. And also it can be quite a good way to look at life in general, I think, because I think a lot of us, a lot of the time, and particularly through COVID, particularly through what's been happening with higher interest rates, we do feel a little bit sensitive, I guess, to the circumstances we're in. But obviously decisions we do have a lot more control over.
I think a lot of people have a lot of indecision in their lives, or a lot of procrastination, and they think, oh, well, everything's against me. But honestly, there's so much out of our control, but there's also so much within our control. And I love that quote, because it's like, you know what? You can actually make your life a lot better making good decisions.
Absolutely.
Yeah. Well, Nerida, just as a way of background, I'd love to just understand a little bit about what you do at Ray White. What's your role, and also what got you into economics in the first place? What sparked your interest in economics?
Okay, yep. So maybe I'll talk quickly about my team. So a team of 5. Our key aim is to bring data to life, and also to be one of the most trusted sources of property research and insights in Australia. So that's kind of our awesome overarching aim.
Yeah, cool.
So we've got a team of 5, we've got a lot of data. So we have all, property sales data over 20 years. We've got all listings data. So I think, we're not unique in that sense, but we do try to look at property differently. We try to keep up to date. And then in terms of what we do, it's a lot of public speaking, a lot of writing content, a lot of media, and we sort of combine all that to provide a service primarily to the Ray White network.
Awesome. That's great. And what got you into economics? Do you like playing with the numbers? Or?
Yeah, absolutely. So I was really good at maths in high school, and then I was going to do actuarial studies.
Oh, right.
So I went to Melbourne Uni and started doing that first year, and kind of got a little bit too dull, I guess.
Yeah.
That's the right word.
Yeah.
And shifted across to econometrics, and then I graduated, and there wasn't many jobs. Early 90s Melbourne, I think youth unemployment was about 30%. So I ended up working for a forecasting company that that built models primarily for commercial property owners. So
Mm.
yeah, it was the start of a very long
Good
journey in
on you.
property, which has been so fantastic.
Fantastic. I actually did econometrics and economics at uni too, and I looked at actuarial studies, but I just thought, oh gosh, I just don't want to work out insurance risk. It was way too boring for me. I like the practical application much more.
Same.
Yeah. So tell us, where are we at right now in the Australian economy? We're recording this in December 2024. How would you best describe the condition of our economy right now?
Look, it's pretty weak. If we have a look at GDP growth, it's sitting at 0.3%. We've come after 2 quarters of around 0.2%. So we're not technically in recession, but we're sort of verging down to a very, very low level of economic growth. The thing that's pretty positive still is unemployment is still quite low, so it's sitting at 4.1%. We do have cost of living pressures, but people still are spending quite a bit on holidays. So, there does seem to be a bit of a disconnect between,
and the Black
Friday,
Friday sales. Everyone can spend $1 on that, right? Find a bargain.
Oh, absolutely. Retail trade will look very good in November, maybe not so good in December. So I think overall, inflation now is within the RBA's target rate. So I think at the moment, we're going okay, but I do think the Reserve Bank will need to cut interest rates sooner rather than later. They beg to differ, but I think potentially we will see a rate cut early next year, although markets are currently pricing one at about June, July.
Just back to your recession comment. Do you think you talked about we're almost on the verge of a technical recession. Do you think we will head to some sort of recession next year, and what would be the factors driving that sort of tipping point, do you think?
Look, I don't know. I don't think so. I think a lot of what drives Australia's economy remains in place. I mean, we still have population growth. I mean, we are somewhere that people want to, a place that people want to live. We still have, mining activity is still okay. We're very similar at the moment. We're very similar to Norway. I mean, Norway is the only other country that hasn't started cutting interest rates. Their economy is driven a lot more by demand for oil, but it's a little bit different in many respects. But the rest of the world has been cutting, and some countries have cut multiple times. But Australia is, we're really holding out. But as for how much longer, I don't know. I think if unemployment does show a marked increase over the next few months, I do think we'll be cutting sooner rather than later.
Yeah. I mean, I just keep reading about the market forecast for interest rate cuts, and they're saying, it's going to be May. Some are forecasting the 1st of April now. But where do you think inflation's going to land in next year? I mean, you say it's just below the 3% band, but do you think it's sustainable? Do you think it's going to be volatile next year?
It could potentially. I mean, it's at 2.8. I mean, October inflation came in at 2.1%, so that's extremely low. The big unknown is Trump and the impact of what he's up to. I mean, he has come out and said he wants to put 60% tariffs on China, and obviously we're not a big trader. We don't trade a lot with the US, but we do trade a lot with China. We're very, very dependent on China for our economic growth. So if China slows down dramatically, that does have implications for us. And also his tariffs do have implications for CPI. I mean, if he starts putting through these enormous tariffs on a range of goods, it does have flow-on impacts to our inflation rates. I think that's a big unknown in terms of what will happen there.
I reckon. I mean, looking at Trump's style, I just think he's a bully negotiator. And he says, I'll make it 60%, and he'll end up making it a 10% tariff. You know what I mean? And then I think, honestly, I reckon Australia's going to be, this is personally, my view, and I actually talked to a Morgan Stanley economist the other day, and he said, same thing. Trump's just a big-nosed negotiator. He's just trying to, grandstand and say, hey, I'm going to protect the American people. But as you know, tariffs are just a stupid policy. I mean, it's just going to affect everybody.
Yes. Yes. I mean, he has said he's a big fan of tariffs. And I agree, it is a negotiating tactic. And also we don't exactly know how China will respond. I mean, they're not going to sit back and take even 10% tariffs. They won't just sit back and take them. So I think that's the unknown at this point.
Okay. So just back to interest rates, like, when we get a cut, let's say we get a 0.25% cut in either April or May, depending on when it's going to be, what's that going to do to the property market? Is it going to take off? Do you think it's just going to restore confidence? Like, what kind of impact do you think it'll have?
It absolutely will give it a boost. I mean, if we have a look historically at the times where we have seen a rate cut after no cut for quite some time, it does give Sydney in particular a bit of a boost. Sydney, obviously has very high house prices. People have very big mortgages. It makes a bit of a difference. So I don't think I don't think the property market will take off. I mean, there's a lot of other challenges we have. I mean, in Melbourne in particular, the Victorian economy is quite likely in recession. We have a lot of taxes that are putting people off. So that's not going to help. We've got Tasmania is seeing very, very low levels of population growth. So I don't think it'll take off, but it will kind of. At the moment, we're seeing quite a substantial slowdown across the country. I do think it will give it a boost, particularly in those markets that are particularly slow at the moment.
Okay, I want to talk about immigration, Nerida, and get your take on the view of the number or the volume of migrants coming to Australia. Do you think high volume is going to continue, and do you think that we're going to continue to see a property shortage as a result?
It will. I mean, we are a country that relies on migration for our economic growth, and if you have a look at somewhere, international students, for example. I mean, our education sector really propped up significantly by the fact that we are a popular place to study for overseas students. So. And also, we do have labour shortages in a lot of sectors. I mean, you talk to people in the hospitality sector, they rely heavily on people coming in from overseas. There's a lot of jobs that, are hard to fill by people that live locally. So we do need migration. The issue, though, of course, is that even the construction industry. I mean, the construction industry. Yes. We need them to build more houses, but they lack the labour. So we need the labour to be imported, but then those people need houses. So there's a big circular problem we have with migration at the moment. We don't have enough homes, but we need more people to build the homes.
That's right. I mean, we had a massive rebound, didn't we? We had almost 500, 600,000 migrants come the year after COVID finished, and then forget the numbers. I think it's about 381,000 so far this calendar year. The government's talking about putting caps on it, trying to get it under 250. Do you think that cap is going to be effective? Do you think they'll actually succeed in getting the numbers down?
Well, as you said, they're not doing too well at the moment. So, I mean, we're a country that people want to be in. So, it really is up to us as to, where we put those caps. But, you can see, we can clearly see it's not as easy as saying, right, stop now. Yeah. We don't want any more people unless we close our borders again. But, it is a hard one to try and get to an exact number. But you're right, like it really was a rebound, and it really did drive prices, and it drove rents, and it came at a time where people were already sort of spread out during COVID, so it did have a huge impact on our property market.
You're right about too, just Australia being such a great lifestyle location and that sort of thing, attracting migrants. But I talked to a lot of business owners in other businesses, and they're all still crying out for highly skilled staff. We definitely have a skills shortage, and that's not going away anytime soon.
No, that's right. Absolutely. I mean, I do a lot with the construction industry, and that's exactly what they're saying, trying to get gangs of tilers, painters, they're just hard to find. And primarily because a lot of, we did have a lot of labour heading back to their home countries during the pandemic. And at the time it made sense, but, it is kind of hard work getting them back again because, it's not such a straightforward process getting into Australia.
And what about our natural population growth? I mean, I remember, was it Peter Costello, used to say, what was his quote about one for the country? I forget it now, but, we're kind of like not repopulating ourselves naturally. So we rely on immigration for economic growth. But is our population growth static or declining, or what's it doing at the moment, do you think?
Look, it's very slow going if you try and rely on just natural growth. I mean, we are an aging population. If you have a look at the biggest or the strongest growth over the next decade in terms of household type will be single person households. So, right. So there's fewer people having children, there's fewer people partnering up, there's more elderly people living alone, so there's just a lot that happens in terms of a demographic sense, which means that not only is housing demand coming from population growth, but also by the fact that that household size is shrinking. We're just spreading out. We're not necessarily living with each other in the same way that we were in previous generations.
That's that single person household increase has got a dramatic impact on the whole housing market, right? I mean, I think for investors, it's also a good thing to take note of, because a lot of people used to poo-poo the idea of a one-bedroom unit, or smaller type properties. But I think they're going to be an increasing demand from affordability perspective, but secondly, because we've got this increasing, demographic group that's in the economy now.
Yeah, absolutely. And the fact is that we can't have a whole lot of single person households living in 4-bedroom homes, which is, the dominant 3 to 4 bedroom homes are the dominant household type in Australia. So, there is definitely a housing choice problem we have at the moment, and also what we're used to in terms of how we're living. I mean, people, we love having a spare bedroom and we like having space around us, but it doesn't really do much for affordability long term if we all live that way.
Yeah, true. I just want to talk a bit about housing supply challenges at the moment, and just sort of putting your policy hat on. But I know the government's talked about various measures, but what measures are being taken to address housing supply? Do you think they're effective or ineffective at the moment?
So the federal government has, obviously has their 1.2 million target over the next 5 years, which is great. You do need to put a number on these things as to what you want to achieve. The problem, though, for federal government and even state government is that there's only so many levers you can pull to hit that target. And the main lever is planning. So across the country now, we are seeing planning easing up pretty much everywhere. So that's positive. I think most developers wouldn't be saying planning is a problem at the moment. The problem at the moment, though, is construction costs are still very, very problematic. I mean, we have seen WA, for example, surge again because, they rely heavily on brick construction. Brick costs have gone through the roof again. In other states, construction costs haven't come back. The rate of growth is slowing, but they haven't come back. Labour is still a problem, which is, can be helped with training and also migration, but that's sort of slow moving. But planning's a big one. But then I think the next stage is you can change planning controls to allow higher levels of development, but then you need to push back on local government challenges. And I think that's the next stage that we're coming up against is that people want affordable housing, but they don't necessarily want it in their backyard. So I think that's kind of the problem we have right now.
The NIMBY factor. Yeah, absolutely. I guess just a couple of things I just want to talk around this issue, but do you think Australia's got a structural supply problem? I mean, I don't personally think that target of 250,000 housing starts a year is realistic. We've been struggling to get to 150, let alone 250. But do you think we've got an intractable supply that's going to lead to a major housing deficit over the next decade?
Possibly. I mean, but I think that we definitely have challenges at the moment that are going to be hard to overcome. So I think, I've spoken about construction and planning, but the other issue is around where's the money going to come from? Because if you have a look at the only other time that we got close to hitting a 1.2 million target was when we had this huge influx of money from China. So
Correct. Yep.
That level of development took place in, Melbourne CBD, in Parramatta, North Ryde, all these places around the country saw huge levels of development. And if you think back to that time, I mean, people were angry at that level of development and they didn't like all the money coming in, and they wanted people to stop, they wanted Chinese investors not to be there. So, we, on one hand, we say we want affordability, but then a lot of what we end up, supporting doesn't really help with affordability. So
it almost comes back to this protectionist policy, doesn't it? Like, I hear what you're saying. A lot of us didn't like saying, all the Chinese investors are taking away our housing supply. I think, in fact, it was the reverse. They actually enabled housing supply to increase because they actually drove the demand that enabled the feasibility for those types of developments to actually get constructed. And I think at the moment, construction costs are so high that a lot of apartments are simply not being built. I mean, I think your data is showing that, apartment approvals are plummeting. Freestanding housing is going okay. It's still not great. But what's your view on construction costs? Do you think that we'll ever significantly decline, or we just get this is a whole new reset? We now have to build properties at this new level.
I think it's been reset. I think what we found when construction costs started to rise was that a lot of construction companies were operating on too low margins, and that was why we're still seeing very high levels of construction industry or construction companies going into receivership at the moment, because they just couldn't withstand that level of increase. So it was extreme, but I think now, we've got fewer operators in the market. They're going to be more careful about how they quote. They're certainly being very careful at the moment. And so even though we have seen many building material costs reduce, particularly timber and steel have come back quite dramatically, we're not seeing a substantial reduction in total construction costs. And I think, a stability in that will be quite possible, but I don't think they're going to come back anytime soon.
Okay, I mean it's tough news if you're a home buyer, but also if you're an investor, it's also good news, because if you're already in the market, the replacement cost of your asset has increased essentially.
Yes, absolutely, and that's the thing with property prices. I mean, people, will come out and make these crazy 30% price drop predictions, but the reality is you just can't build these homes at the prices that many people are paying for them. So, that as you said, that replacement cost is so much higher than what property prices are now. So that does put a floor in terms of how much they can fall.
I mean, I've just done a small build of a couple of townhouses in Brisbane myself, and at the time, first I was quoted $800K to build two of them, and then the actual quote we ended up getting was 1.1. So it went up 30%. It was like, well, far out. And I bit the bullet. I've done it, and I'm pleased I've done it, because I know that the end value is even more than that now. So it's all a matter of perspective of when you take the plunge to actually do that sort of development, or at whatever scale you're going to do it. But I just want to talk about the future, and your report specifically talks about some expected price rises, but you mentioned the pace of growth is going to slow. What's the main reason you're saying that prices are going to decelerate generally across the board?
Look, we're already seeing it. So the absolute peak of growth was June this year. So in June, Perth, for example, was moving at about 25%. Crazy. And then, Southeast Queensland was kind of high teens. Melbourne and Sydney were still growing. And then we've got to November. So once we got our November data, we could see that Perth is still growing 21%, but we've got places like Melbourne, which are, pretty flat at this point. Sydney, barely moving. Queensland's still growing, but not as fast. But so I think there's a few things that have happened. I think there has been a problem with cost of living. I think we were able to get through the high interest rate environment. We were able to buy the homes that we wanted, even though construction costs had moved so quickly, because we did have a lot of savings, and there was that those higher interest rates did take longer to cut in because of that. But that's now wearing thin. I think people are now starting to spend through their savings. But also just sentiment has switched. So even Perth, we know Perth has a shortage of properties for sale. We know rents are growing a lot, but at the same time, Melbourne and Sydney are starting to look quite weak. And so I think that impacts not just sentiment in Perth, but obviously that also impacts sentiment of people that are looking to buy in Perth. So I think there's a few things happening, but and then you've got somewhere like Hobart, which I mentioned earlier, that population growth has just collapsed. So it's that in a city like Hobart, there's just not that much demand fundamentally.
Okay. We really appreciate you tuning in to the Propertybuyer Podcast, and I hope that you're finding our expert interviews helpful. So that we can keep providing this information and growing our audience, we rely on word-of-mouth recommendations. If you found this information useful, could I please ask you to share this podcast with your friends, family and colleagues, and ask them to subscribe to the Propertybuyer Podcast. It would be a big help, and we'd be very grateful for your support. Thanks once again for sharing the links. And now, let's get back to the podcast. So you've kind of mentioned a couple of capital cities, but not repeating the question. Maybe we could just do a quick whip around the capital cities. Do you have any specific percentage forecasts for where you think prices will go in each of the capital cities the next 1 to 2 years?
Not specific numbers, but
Mm-hmm.
I think over the next 12 months, I think Melbourne. Oh well, okay. So Melbourne, Sydney, I think will be pretty flat now until we see rate cuts, and I
Yep.
think once we start to see rate cuts coming through, that will give them a bit of a jolt.
Yep.
I think Sydney will move more quickly than Melbourne. Melbourne has problems with taxation. The economy is not doing well. Unemployment's pretty high, so I think that will take a bit longer for that to be resolved. Southeast Queensland, probably it's running in sort of around 7 to 10% now. Probably, be in the ballpark of 0 to 5% until we get rate cuts coming through, and then that will give it a boost. And pretty similar in Adelaide and Perth. I mean, Perth, I think, will probably be more in that 10 to 15% range. Adelaide's probably quite similar to Brisbane, but those markets are, Southeast Queensland is continuing to attract a lot of population growth, so that will help. Adelaide's very affordable, does seem to see a lot of activity as a result of that affordability, but also population growth. And I think WA has just been going through a lot of catch up. I mean, if you have a look at rental growth, rents have doubled in WA over the past 4 or 5 years, and it has come after 10 to 15 years of rental decline. So it has been catch up that's been going on over there.
Fantastic. That's a great summary. Nerida, we're just going to take a 30-second break, and we'll be right back with the second half, where we're going to get into talking about your golden arc, the luxury market, and we're going to talk about investors. So we'll be right back.
Great.
If you're enjoying this podcast and feel like you're getting good information, could I ask you to please share this link with your friends and family who would also benefit? If you've got any questions or like to ask on future episodes, please go to the right-hand side of our podcast page and click on the speak pipe to record your voice question, and I'll respond in future episodes. And just before we get back to Nerida with more questions, if you'd like more information about our buyer's agent services around Australia, please reach out to us today on 1300 655 615, email us at info@propertybuyer.com.au, or send us your inquiry via our website. We'd be delighted to assist you. So Nerida, let's get back into your report, because you talk a bit about the luxury market. Well, I'm very curious. You mentioned a shake-up. So what does that mean? Are we going to see the top end spike, crumble, and what's driving that top end of the market?
So at the moment, we're starting to see the top end of the Sydney market slow down quite dramatically. So when we talk top end, we're talking sort of the top 5% of all properties. We started to see it slow down from about June of this year, and what seems to be happening is that obviously demand has slowed, and I think it's probably interest rate related. I mean, we often talk about luxury buyers not being so interest rate sensitive, but I think that a lot of them probably are, and as a result, that that's really starting to cut through.
It's funny, isn't it? You talk about someone buying a $20 million property, and you say, "Oh, they're not interest rate affected." They are, right? Even though they might not be borrowing much, their sentiment affects them, right?
Absolutely. Yeah, they may only want to pay 18.
Yeah, exactly.
So there we go.
Exactly.
10% reduction.
Yeah.
So that's happening, and we're starting to see it happen in Melbourne as well, and pretty much everywhere now at this point does look like that top end of the market for houses specifically is really starting to weaken. Affordability does seem to be driving the cheaper end of the market. So when we have a look at homes priced at the median, even in Sydney, or not so much Sydney, probably Sydney's kind of the cheapest 20% seems to be moving quite quickly still. So there's a definite diversion, I guess, in terms of what's happening across each different price point. Apartments are very different. I mean, with apartments, the top end is holding up very well, and a lot to do with downsizes, or right, a lot of people like to call them right sizes, but people moving out of the big family home and into an apartment does seem to be supporting that more expensive part of the apartment market.
Interesting. I mean, I think my view of the top end of the market is it's very tightly held. If you're talking, like, for example, in Sydney's eastern suburbs or the lower North Shore, a lot of those top end markets do tend to hold their value. Not to say they don't decrease in value at all. Definitely they move up and down, but just the shortage. And we've seen some spectacular results, and we've helped some fairly high profile clients buy their properties in those markets. I think it's interesting, for example, Toorak, you're definitely seeing some really interesting trading going on in that market at the moment. And also particularly the inner Brisbane market, like around Highgate Hill, West End. Yeah, you're seeing some good activity there. So I don't think that market's going to really in any way collapse. I think it's going to still be strong, but I think it's certainly more subdued going into the next 2 years. So in my view also, it spells opportunity for buyers as well. So
yeah, absolutely.
Tell me about this concept of golden arc. I was very curious what you mean by that, and tell me about its significance in the property landscape.
So it's a term we're trying to get people to use. So I don't know how successful we'll be, but
we're talking about it today. Here's your chance, right?
We're talking about it today.
Yeah.
So it's basically the area from Byron Bay, moving up north, Tweed Heads, up to Gold Coast, through to Brisbane, up to Sunshine Coast.
Yep.
And
Great.
It's an area that has traditionally, parts of it have been quite boom bust. I mean, particularly Gold Coast has been a traditionally boom bust market, but not so much now. But it is an area that does seem to be, or is continuing to see a lot of population growth. There's particularly from New South Wales and Victoria, we can see from migration numbers that area does seem to be very attractive to people. But also the economy seems to be changing. I mean, I think anyone who's spent significant time on the Gold Coast in particular in recent years has seen that market change, not just from a housing perspective, that it has become super, super expensive, but even things like a lot of the holiday apartments are being converted to first home buyer stock. So a lot of young people moving in, a lot of people working differently has changed that market. So, not necessarily people working full time from the Gold Coast, but, maybe 3 or 4 days, a few days in Sydney seems to be changing it a little bit. And a lot of that also does lead to change in the types of businesses that get developed in that area. And that's definitely a change that we've seen.
Just on the back of that too, we've just expanded our services to become a national buyer's agency. And I've got a buyer's agent now based in Byron Bay for that very reason. And we're covering that whole northern rivers from Byron, from basically Coffs Harbour up to the border. And then obviously I've got the buyer's agents for the Gold Coast, Brisbane, and also Sunny Coast. And just in our own buyer's agency business, we've noticed very much an increasing demand from people relocating to that area to live, also investors, and also expats buying something to then come back to as well. And they like it because they just feel like that's their part of Australia. They want that sort of sea change, tree change type environment. So that's what we're certainly noticing.
Yeah, so interesting. Beautiful part of the world.
Very nice. And I think, you've got some pretty high profile people like Chris Hemsworth buying at Byron and others. So
yeah,
trendy.
Absolutely.
Yeah.
Absolutely.
Tell me also, you mentioned about the Australia's regional $1 million club. What areas or regional areas are hitting that sort of $1 million price trend? What's contributing to that trend?
Yeah, so more and more places are hitting it. I mean, we've got places like Gold Coast, Sunshine Coast hit that over the last couple of years. We're starting to see places like the Margaret River region about to hit that level. A lot of the areas they're quite close to capital cities are often in commuting distance. But I think this is one of the more permanent changes we've seen through COVID. Obviously, through COVID, we did see record levels of movement to regional Australia. There was a view that would tumble back when people were called back to work, but I think people have really discovered these areas and are making a change, which does support pricing. But also that people, we do have an aging population, and a lot of older Australians have, built up a lot of wealth through various means. Obviously, housing is one of them, and are now looking to retire. And these areas, are beautiful places to retire. So that seems to also be a driver.
Definitely. A lot of, retirees moving early. Fantastic. Let's talk about investors. We haven't really touched on the investor sort of activity, but, investors seem to be, I've just noticed the figures for lending seems to be going up month to month. What are you observing in terms of property investor trends, particularly in the residential sector?
Bit of a shift. I think Perth was, one of the hot locations. It does seem to still be an area that we're seeing quite a bit of investment, particularly in those more affordable areas where Pretty good rental demand. Price growth has been pretty good. But I mean, one of the early shifts we're also seeing is more investors moving to Victoria. So Melbourne in particular, we can see through our auction data, we have seen a bit of a pick up in interstate investors buying in Victoria. I think, the market's been quite soft. I think there's a view that long term it'll be fine, even though right now it does seem pretty weak, and people are sort of taking the opportunity at this point.
Yeah, we've noticed a lot more investors coming onto our books in the last year, even though interest rates have been a bit higher. They're actually seeing that you can still buy good quality properties with positive cash flow, even with high interest rates, particularly in the regions. We're doing a fair bit in northern Queensland, places like Townsville, Mackay, Rockhampton, where you're getting some good deals. But I think generally people that take a longer term view of the property market, understanding that it's undersupplied, are starting to come back into the market. Let's talk about the commercial property market, Nerida. What are you seeing? I mean, your report suggests that in the retail sector is set to lead the commercial property market performance. What do you think the main reason for retail being a front runner?
Yeah, it's a bit of a surprise. I mean, retail has been seen as a pretty weak sector for a long time. Obviously, we're moving online, and that does change the way people shop. Retail, though, I mean, you do have to be careful what you buy. I think with commercial, there's always opportunity. I mean, people love the yields with commercial. Often it's a much more high yielding sector compared to residential, for example. But retail, particularly those convenience-based centres, do seem to be doing really well. We're still mostly doing our grocery shopping in person, so that really supports it. And then even some retail strips. I mean, you do have to be careful buying in a retail strip, but if you're in an area that has good traffic flow, is an area that you've got a lot of high density development taking place, and then that really does support demand for smaller retail centres as well. So I think retail, is definitely one to watch. I mean, the other thing with retail is that it's going okay, but the other sectors, particularly office, is doing so badly that it is looking far more attractive than perhaps it otherwise would.
Yeah, I was going to say, you actually mentioned the death of the secondary office market in your report. So what's the implication of that if you're a property investor?
Yeah, I mean, commercial's tough. I mean, not commercial, office is tough because obviously people are working from home more. It's been such a permanent shift of COVID that people just don't work the same way that they used to work. So it has had an impact. At the moment, what we're seeing is that some office markets are doing okay. I mean, Queensland in particular, Southeast Queensland at the moment is okay, but the one that is expected to really struggle long term is secondary office, because people are getting such good deals in prime office locations. To try and get people back to work, you do need to offer something a little bit better. So, that does mean either better located or a better office building or better services. So that seems to be a driver. But definitely, if we have a look at what's going to happen over the next few years, we are going to see less development taking place. So it does mean that vacancy rates won't necessarily blow out overall, but it does mean that a lot of secondary space becomes even more secondary and in much lower demand.
Okay. And we've found also just industrial. What's your prognosis or perspective on industrial property?
Yeah, I mean, total returns have come back. So I think places like WA and New South Wales are looking a bit better than places like Victoria and Queensland, for example. It has been the darling of the market for 10 to 15 years. So it's it's still good. I mean, don't get me wrong, it's not seeing terrible conditions, but it's not quite as strong as it was a couple of years ago. And a lot to do, not so much with tenant demand, but I think also just investor demand as well as a little bit softened compared to where we were, particularly during COVID.
Yeah, I think the industrial market's very location specific. We're buying quite a lot of industrial commercial property for our clients in Queensland and Brisbane and getting great yields, but more around sort of that price point for say $1.5 up to $5 million and getting 6.5+% net returns for our investors in that market. So it's still pretty strong. It's good.
Yeah, I mean, absolutely great on yield. And I think this is with all commercial property, but people do tend to buy on yield as opposed to residential, where people buy for the potential for capital growth. So it's definitely worth looking at if you can get a really decent yield on it.
That's right. Love to chat to you about lending. It seems like your report indicates that 8 in 10 Australians might move away from the big four banks in search of better lending options. What's driving that sort of behaviour? Is there more demand for private lending out there now?
Yeah, so it's just the choice available for people at the moment, and also the impact of what even a quite minor reduction in interest rates can make to your home loan. So obviously it's quite easy to switch home loans now. If you use a mortgage broker, that obviously makes it even easier, because they do have a range of products available to them. So certainly we do have a big mortgage broking business, so that's loan market. But what they're finding is that people are wanting to know more about different types of lenders than previously, and a lot to do with the options that are now available to them.
Yeah, I'll actually be doing a podcast with a mortgage broker in 2 weeks' time, so watch this space on that. We'll be talking a lot about the sort of the opportunity to not just go with the majors, but with some of the private and second tier lenders. I've got 2 more questions for you, Nerida. Hope you can hang in there with me. But
Yeah,
you're doing this is great discussion today. But I guess looking ahead, future market risks. What potential risks or challenges do you think buyers and sellers should be aware of as we move into 2025?
I suppose the big one is the timing of interest rates. So we don't exactly know when they'll happen. We don't know what the impact of a Trump government will do to inflation. So I think whenever you're looking to buy, don't hold out that interest rates will be cut sooner rather than later. And if they are, amazing. I think that's great if you've bought something on and rates are cut. But I think that's probably the big risk at the moment. It is super uncertain as to when those cuts will be coming through.
Yeah, I mean, we often get asked in our business, Rich, when should I buy? And my answer is not dependent on an interest rate cut, when you can afford to buy.
I agree.
When you have finance approval, use it or lose it. It's a discussion we have every single day. You can't wait for the perfect economic conditions.
No. And I think that's even applies to first home buyers too. It's, buy as soon as you're ready and buy as soon as possible. I think exactly. That's the general advice. And also don't keep looking at the value of your home, because first 3 years always it's a bit tough when you buy.
As an aside, I've just helped my son to buy his first property, and he's going through all the dramas of getting finance, but he's bought his first property at a very young age, so very proud of him.
Oh, good on him.
Yeah, so I guess 2 more questions. What do you think the mood of the market will be next year? If you had to sort of summarize in a couple of words, what's the mood of the market, do you think, in 2025?
Oh, look, I think going into 25, it's looking far more subdued. I think people are, it's been a really rapid shift. I mean, we were starting to see things slow dramatically in Melbourne quite early. Sydney was a little bit longer, but even, I was in Perth about 4 weeks ago, and at that point it was quite mixed. Some people were saying, open homes are a little bit slower. Other markets were still really strong. Brisbane was saying, that they were, open homes in particular weren't seeing quite the volume that they were seeing even a couple of weeks before. So I think we're moving into a more subdued market. I think for buyers it's good. A slower market is an easier market to buy in, because it gives you a bit more time to make a decision. We've also seen a lot of stock coming onto the market, so I think that's also been a factor, that there's also been quite a lot of things available to buy, which is obviously great for buyers.
I think maybe just a quick aside there, that if it is going to be subdued, I think it will be. It's a brilliant opportunity for buyers, because there is a bit more choice. The danger is, though, that people may not be aware of for buyers, is they could end up overpaying just slightly. And the last thing you want to do, if there's a sale on and you can get a slight discount, you don't want to end up overpaying. So that's where, we offer our services, particularly in a negotiation and analysis viewpoint, is we can give a really granular insight into what a property's worth in today's market right at the moment. So,
yeah, that's great.
Nerida, last question. What has been your best property investment that you've done, or maybe you'd just like to share one tip with our audience today?
I guess maybe my tip would be, particularly for first home buyers. I mean, I already said it just before, but I think the thing is, if you are a young person, don't get too hung up on the market. Don't get too hung up on the location. when you're buying your first home, look at rent investing, get into the market early, buy something you can afford. But I think most importantly, your first home's not your forever home. And, you really are at the start of a journey when you buy your first home. So, I think unlike most people, our first home was a brick-clad weatherboard, for rundown in Heidelberg in Melbourne. And, we did it up. We spent a lot of time, getting it ready for sale and have moved on to better property since then. So I think, it is a journey that you go through, and, buying your first home is always hard work, but always good to get in early.
Excellent. It is a journey. It's a journey of struggle and of building equity and getting to where you are today. Well done. That's great. Thank you. So we've been chatting to Nerida Conisbee, Chief Economist at Ray White. Nerida, it's been an absolute delight to chat with you today. Thank you so much for your time.
Thanks for having me.
Oh, it's been a pleasure. And look, thank you again for listening to another edition of the Property Buyer Podcast. We'll be back very soon with our next episode. Thanks for listening. I'm Rich Harvey. Thanks for being with us on another Property Buyer Podcast. If you have a question you'd like to ask, please click on the SpeakPipe link and we'll answer this during the next episode. If you're looking to buy a residential or commercial property in the near future and would like to get the added advantage of having a buyer's advocate on your side, then please reach out to my team today and send us your inquiry, and we'd be delighted to help. Please visit our website at propertybuyer.com.au, where you can stay updated with all my latest market updates, weekly blogs and live suburb profiles to help you make better property decisions. We look forward to connecting with you again on the next Property Buyer Podcast.